Hey guys. Hey, I do apologize for the wait. Hey there. Hey, thank you very much. I do apologize for the wait. I was doing something. Okay. Let me turn on the sharing screen too. Okay, can you guys see my screen? Can you guys see the screen? Wait, let me... Okay. Okay, hey there guys. Welcome to another IronFX live trading webinar series. Well, just doing a mic check. Can you guys hear me? Can you guys see the screen? Because I am currently, let me turn on for everyone. Okay, everyone can chat. Everyone can chat. Hey there, type something in the chat. So because I'm currently using a new setup, a new mic, the entire setup is new. Okay, all fine. Hey there. Thank you, Martin. Thank you, Abdul. Thank you very much for the confirmation. Okay, let me begin. Welcome to another IronFX live trading session on a Thursday evening. Okay, thank you for tuning in. It's nearly the end of the week. Okay, thank God it's Thursday and I'm here hosting this live trading session for you guys. Okay, my name is Chen Yongjing and I will be your host for today's session. Nice to meet you all. Hey, thanks, Awa. Yeah, okay, Ken. Thanks for the confirmation. Hey, where are you guys tuning in from? Are you guys from around the world? So we can see roughly where you guys are from. Okay. As disclaimer, as usual, this webinar should not be considered investment advice or even a signal service or an investment recommendation, but instead educational material only. Hey there, nice. Hey, Cobus, you are from South Africa. Wow, Martin is from Germany. Khan is from the UK. Wow, we have everyone from all over the world tuning in. That's what I like about this education series. Wow, Zimbabwe even. Everyone from all around the world gathering in this Zoom session, and we are all learning. Okay, let me get on to the good stuff. Okay, just a quick one on the IronFX website. Oh, Nigeria. Okay, nice. Okay, on the IronFX website, to get this kind of webinars and education, you guys can go under IronFX School and Webinars. So you can sign up for the free webinars coming up this month, especially now you can see that I'm doing the live trading session and my name is there. Okay, let us begin. Let me change the dark mode. Okay, is there any currencies that you guys want me to take a look at before we begin? Well, I will be presenting using smart money concepts for today. Have you guys heard about smart money concepts? I'm using that mainly for my trading, personal trading too. Okay, Euro USD. Okay, that is a very good one. Let's do it. I'll clear the charts. Okay, let me clear the status, the appearance. Let me clear the lines. Okay, nice. Okay, let us begin. Okay, we are looking at the daily. First, I want to get a rough story on what is going on in the market. What is going on? Why? Price had a very bullish movement going upwards due to the weakening of the DXY. Okay, using smart money concepts, I've noticed that price is constantly bouncing. But why? What is smart money concepts? Yes, that's a very good question. It is like trading using supply and demand, but I'm using a very refined supply and demand zone. And I also look at liquidity. I focus a lot on liquidity and where the highs are and where the lows are. So for example, looking at the 1 hour chart, okay, maybe 4 hour chart, this is a bit too big. Okay, so price bounce off this area and this area. So what are we looking for? What did price clear? It cleared. If I use a magnet tool and hold the shift key, I can move all the way back and sell side liquidity, where price went down to just imagine it as the market coming down to clear everybody's stop loss, clear everybody's positions out before they accumulate enough momentum to continue moving upwards. The same thing can be seen here with price coming down just to clear out the sell side liquidity. Okay, so same thing, I draw a line using the magnet tool all the way backwards. So you can take a look, price had cleared the sell side liquidity. So if you actually zoom in, you notice that these areas are not equal lows where price actually did clear. It actually did clear all the liquidity. That's why price is moving higher and higher. So I also want to have a clear explanation on why price at this area in particular, how you could have entered on this to the upside. Well, so later I'll show you guys a forecast which I did for Euro USD on last Saturday. So last Saturday was on the 22nd. I actually forecasted Euro dollar to actually reach this area, and it just hits my take profit. So I will show you guys how. And I'll show you guys the forecast which I wrote. Okay, over here, have you guys heard about market imbalance? Markets imbalance. Let me type out in chat. Market imbalance or fair value gap. Have you guys heard about that? It's very, very useful in trading. If you guys are not using this, you are missing out. You are really missing out. Please take notes of this market imbalance and the fair value gap. Okay, so adding that in, you can take a look right here. Price came down. Why did price came down? To clear the market imbalance that is resting right here. So for a lot of traders like to, wow, I want to enter a nice euro. Let's say you are looking for a long. So you mark out these points of interest. So you mark out this nice little candle right here. You'll be telling yourself, nice, I'm looking for a price to get back down here, and then I start to search for an entry. So nice, so I can enter with my long position here, maybe stop loss at the bottom somewhere, or can be here. But you notice, price did not come down. Then you'll be telling yourself, damn, I just missed the entire trade. So I was waiting the entire day, waiting. And then price didn't even come into this area. So this is where I'm bringing you guys in on the market imbalance. How do I spot the market imbalance? How do I spot that? That is when there is this particular area. Let me zoom in. I'll zoom in closer and closer so you guys can see very, very clearly. I don't want you guys to miss this out. So you can actually take a look. Previously, price did not tap into this area. This specific area, it's a market imbalance. Do you like it if the price moves and all of a sudden it just shoots up? It's not clean price movements. I don't like that. So when that happens, price eventually has to come down. So with the use of market imbalance, we are kind of forecasting or potentially predicting where the markets might go to. So in this case, the price actually went down here and then it shot up. Exactly the same in that scenario. Hey, so let me draw it out clearly. I'll remove this out, and then we can use the replay button to see what actually happened when price tapped into that area. So this area is actually, you can actually use this, you can call it retracement, buy entry. But before you even confirm a buy, we always look for break in market structure. So break in market structure is when price breaks the high, breaks the previous high, which is located right here. So price went up, and let me set okay, break of market structure. Okay, it's a bit small, I'll make it bigger. Okay, break of market structure, the price broke. So how do we see that the price has broken? Price go down, up, go up, down, but it broke again. This area was broken. However, it was a liquidity grab. So that liquidity grab with this break of market structure, we can start to look for a buy entry. So looking for buy entry, we are not, as I mentioned earlier, we are not just looking at a random candle at the bottom and taking it as a demand area. We enter via the imbalance. So let's do a quick replay. So maybe we can see how price reacted to that area. So you can see, let me play the replay up. So price closed this way. You can see this area, price did a very nice, I'll draw the same. So it did that, came down, cleared liquidity, and it shot up. So this area right here is the imbalance, where you are looking for price to come down to tap in. You can tap a few times and then off it goes. That's where you are looking for your entry. It's also known as the fair value gap. Fair value gap. So let us start this. Maybe I'll increase 3 updates per second. You can see price tapped in, and continue moving upwards. This is on the 4 hours chart. Okay, I'll exit this replay right now. Exit this. So maybe let's take a look into the smaller time frame. Since we are on the 4 hours time frame, most of us, are you guys actually day traders? Are you guys day traders where you guys enter a trade during the day and then you close the trade within the same day? So let me know in chat whether you guys are intraday traders. Intraday traders, and what time frame do you guys look at? I would be very interested to know. Before I tell you guys what time frame I look at, I want to know what time frame do you guys look at during the day. What time frame are you guys at? So I move on to the... Okay, Cobus, I hear you. I see you. 15 minutes to 30 minutes charts. Martin, nice, intraday. And you do it between the 5 minutes and 1 hour time frame. Hey, that's very good, very good. I like to hear that. Because what I'll be doing, I'll be going down to the 5 minutes too. So that's why I'm asking you guys, in case you guys might think it's a little too fast or too crazy in the smaller time frame. So let's take a look at a possible entry where we could have. So I just mark this out clearly again. What is this area? Is the H4 market imbalance, or also known as the fair value gap. So insights on the right side. So you can see price tapped very, very nicely into the area. So where could you have entered? This is an entry which I already entered, and I can show you guys. I want you guys to spot it. Where is the break of structure? So I'll just do a quick one. Price, zigzag, zigzag, and then gets smaller. Gets so small. Look at this. Goes small, small, and it goes up. But what we are looking for is the larger movement. So I'll be drawing this way. So you can see price went up and cleared this area, or this small little area. Okay, I think I need to draw it properly. So I zoom in better. Okay. Down, up, down, up, down. So you see the structure, this area. What do you notice? What is going on? The zigzag, up and down zigzag, is getting smaller and smaller. So this tells me, first of all, that the bearish momentum is weakening. To add confluence to that, price has already hit into the H4 markets imbalance, and then it went up. What did it do? It broke structure. So where did it break structure? It broke this structure right here. And where could we have entered? Where could we have entered? So I'll clear this chart out, clear this out. So I'll draw it nicely. So this area had a break in structure. And then now we are in the 15 minutes. Where could we have entered? Same thing, using markets imbalance or the fair value gap. So I will be using the rectangle, and then I'll draw it out. You can take a look right here. Right here, there is a fair value gap. You can see very clearly, price came in just to tap into the fair value gap area before price shot all the way. So I actually don't use any indicators. So this is actually the company's accounts. That is why there is the Ichimoku cloud. But on my personal account, there is 0 indicators. I don't use any indicators. I feel that its indicators are lagging. It's built on programming. There are maths calculated behind the scene. It's all old data. What we want is the feel of the markets, where we look at it based on data and facts, indisputable facts, that there is a market imbalance and price has broken structure. All these are indisputable facts that an indicator cannot compare with or cannot argue. So if you use a Bollinger Band, you use a moving average, use all these kind of other indicators, but then when you combine it, you start to notice one indicator. So let's say moving average crossover or RSI. The RSI can tell you that it's oversold, but the moving average tells you otherwise. So indicators can be very, very conflicting. That's why I do not use indicators. I would rather look at the market as it is, based on data, facts, and facts. So this area, market imbalance, tapped in. I'll draw it out nicely using the rectangle. So maybe I'll change it to blue so I can differentiate. So I'll call this the M15. M15. So you guys already know M15 markets imbalance. So let's take a look inside. Right. Okay, Smith. Hey, you are asking where can you learn more about my strategy? Well, you can find it on YouTube. You can search smart money concepts. There are quite a few YouTubers doing it for free. They're teaching you guys the good stuff for free. But then I'll show you where you can learn it to. Where you guys can learn it to. So let me continue this. I'll explain this finish first before I show you. So the M15 chart. Price goes in. Tapped very nicely. It only has to do one tap. Just one tiny tap. So maybe we can see 5 minutes. Is there any area where we could have refined this trade? So there's nothing to refine. There's no imbalance within the larger time frame imbalance. So I'll just use it. I'll just stick to as it is on the M15. So let's do a chart replay on what happened. So replay. Let's look at the breakout structure. So we take it as it is. It is on the, I'll change it to New York time, so everyone is in sync of what is going on. So this is 6:45 a.m. New York time. So if you guys want to be in sync with me, can take a look. I set it to UTC -4 New York time. So let's start it. Price, okay, 1 times update. Okay, 3 update per second. Okay, let's do it. Price goes down, break of structure, broke market structure. And then let's take a look. Since we have already spotted out these markets imbalance right here, we can do this with our entry right here and stop loss at the bottom right here. Why is it at the bottom and not here? And not here, and not here? Because we are expecting this area to be the respected low, where you don't expect price to come further than this area. So if price actually comes down to this area, sorry man, your stop loss has been hit. Well, your analysis was wrong. That's why just keep it a tight one, risk 1% of your account, and boom, let's go. Let's go, guys. So we enter, I'll start the replay. So price tapping in. Price has already tapped in. And let's take a look how price reacts to the buy side liquidity. You're not just looking for what do you call it? You're not just looking for TP all the way up to maybe a zone that you have all the way back on the left side of the chart. So always remember, when you guys want to take profit, always must have some kind of explanation. You cannot tell me. So if you were here with me in real life, if you are telling me, oh, you guys want to take profit here, take profit there, but there always must have a logic. Always must have some kind of reasoning on why you actually entered your trade and where is your take profit zone. You cannot just tell me it's an estimate or you roughly think or based on your gut feeling. If it's gut feeling, you're trading it wrong already. So I set this area as my first take profit area, maybe a TP3, the first minor take profits area. So you will notice that usually when price clears a previous high, price continues going up. So we can see maybe there might be a reaction to that area. Okay, it's going. I think I increase the speed. Should I increase the speed? I want to, but let's go by 10. Okay, there wasn't much reaction, but price eventually hits the take profits after around, how long did it take? Take a look. So it took me one full day of just holding before it hits take profits. But then again, I'm still looking for another long because my bias is on the long side. So the first take profit has already been taken. So let me show you guys another trade that I took last night. So last night I was looking, okay, for me last night, the timing is probably around maybe 9 a.m., 10 a.m. New York time, UTC minus 4. So for me, it was during the night time. So let me exit this replay. I'll show you guys the trade I took yesterday. Same thing. I had a very nice trade entry here. Very, very nice trade entry here. And then I take profits around here. Can we trade with you? Sorry guys. I'm not supposed to do this on stream. But thank you for asking that, Cobus. So yesterday, I took a trade here. And then I just took profit the moment price just hits my buy side liquidity. But again, we want to see what is going on. How did I fine tune it? So I can show you guys my analysis later that I actually drew yesterday. It was already published yesterday where I was already expecting where price could be headed to, especially this area. How did I refine it? So looking down, I went down to the 5 minutes chart. So looking down at the 5 minutes chart, I'm looking at this area like, damn, it's so messy. And then to many traders, retail traders, you guys will draw some kind of triangle looking for breakouts. Oh, nice, I got a breakout entry. But the thing is, using the breakout entry, you guys would have, instead of entering, my entry was very, very at the bottom. My entry was very close here. But you guys would have entered late around here if you guys don't use smart money concepts and try to see the smaller picture. Okay, it sounds very, very it sounds very wrong to say look at the smaller picture, because normally you want to take a step back, take a look at the big picture. What is going on with the charts? What is going on? What is the larger 4 hours, daily, 1 hour time frame? Guys want to know, then after you guys zoom in. But what I mean by taking a closer look at the smaller picture is I zoom into the 5 minutes, 4 minutes, 3 minutes, 2 minutes, and even the 1 minute charts to take a look at what is going on. I want to know the story. What is the chart currently crafting? So to me, it's like art that the chart is moving. So I didn't see anything. So before that, in the day I was looking, so it was 8 here, 8 a.m. Okay, 8 p.m. at this line here. For me, it was 8 a.m. in the morning when I was looking at this chart. So I was trying to find out a place where price could, it's not a confirmation. I'm just marking out areas. So I want to mark out an area where price might head to. So I went down to 4 minutes. Is there anything? Is there a point of interest somewhere? I'm just looking, just a quick glance. So moving back, I go to the 3 minutes chart. So you take a look, 3 minutes chart. Is there anything? Then maybe there's something. Looking at this long wick here, I might be thinking there might be liquidity lying down here where price might go to, but it's not clear yet. It's not that clear yet. Not that clear yet. Okay, so I can go down to, I can mark this area out. Mark this area out. Mark this area out. I'll set this as the sell side liquidity, just due to this long wick and this area. It might have been a sell side liquidity too. I can mark it out, but I cannot confirm that price can head to that area. I cannot confirm it. I can only mark it out. So I mark this out. Price nearly tapped into that area, but it did not. So since I already got my picture on what is going on, potential liquidity, you guys notice that I focus a lot on liquidity. I imagine it as an area where the market comes down to clear the stop losses of other traders. I just imagine it that way. An area where market comes down, swipes you out of the market, and continues heading upwards. It gathered your money. For you, it might be a loss. So it gathered all the money accumulation. That's just my thought process, just an imagination on what might happen at this area. So again, you can see price did a zigzag, and it formed a, what is this area? It's lower than this, so I call this a lower low. So price goes up, continue, goes down, then it's smashed down, goes up, comes down. By this area, we might be expecting price to continue going downwards, where that's where many traders actually just smash on their meta trader. Sell, because they think it's going to go down. Wow, there's so much area. So there's so much clean area. Here. Price can continue going down. But since we are in a bullish market, the overall larger time frame is bullish. So okay, let me clear this out first. So we are looking at the larger time frame is bullish. We do not want to be counter trading the market. We do not want to, if the market bullish, wow, it's going up. But then there you are there on your computer there. Oh, I think I want to sell, do a nice sell. But the market goes against you since it is a bullish trend and hits your stop loss. So always remember to trade with the markets. Do not counter trade. So same thing, price goes here. And as a smart money concept trader, I only wait when price shows me what it wants to do. So shows me what it wants to do. It broke market structure. So immediately I mark out. Immediately you can mark out this area. Break of market structure, BMS. I call it BMS, break of market structure. So maybe I can put it to 20 so you guys can see pretty clear. So I think I have to get it thicker. Okay. It's pretty clear. Break of market structure. And then you can have an entry right here. And I'll clear this out so you guys can see where is the market imbalance. So maybe on the 5 minutes first, 15 minutes first, because that's the intraday candle pricing in the where people are looking at. So there is no imbalance that I'm looking at. I don't see anything. So that's where you start going smaller and smaller into maybe a 5 minutes time frame. So moving into the 5 minutes time frame, I actually noted out that there is market imbalance right here, this area, and this area right here. So I was looking for price to tap into that area and go up. But price actually took quite a while. It was frolicking. It was doing this sideways movements. But again, always remember, even though I entered a trade, I entered right here at this market imbalance, stop loss at the bottom. Why do I do that? Price could, because if I set it here, you just want to have a nice, wow, you want to show your friends, you have a very nice 1 to 10 risk to reward. So you can post on Instagram, show you guys, wow, look at this, my trading is so good. Then you guys have a very nice risk to reward, clearing the high. So we call it I mentioned again, the buy side liquidity. So do not do that. We don't want a tight, very tight stop loss just to be cleared, to clear your stop loss, and then your forecast goes in the right direction. It will really hit your psychology very, very hard. So it hits your psychology very hard. You'll be very, very pissed off, very angry, or you might be sad that your forecast was right. But due to your tight stop loss, you lost the trade, but it could have been a winning trade. So as usual, set my stop loss at the very bottom. So I'll clear this area out. So, and I mentioned again, I expect this area to be a respected low. So I'll draw out the market imbalance area. It's on the M5 chart. So it's very small, it's right here. So with my entry in place there, I could have I entered a 1.67 risk to reward, and I let the runners run. So what do I mean by let the runners run? I close a small percentage of my trade right there before I let the market continue doing its thing, and I actually have a higher take profit at the very top of the market, very, very top, but I'll show you guys later on. Just for now, we focus on this nice trade. So I let the runners run, continue to my overall larger H4, the 4 hours take profit area. So why do I set? I just say it one more time and one more time. Just hopefully you guys can grasp it. So I set the stop loss here in case price comes down to clear all this liquidity. There's so much liquidity here where price could potentially come down just to clear before heading up. Potentially, or it might just come down and hit my stop loss. But why? Why is it so wide? Again, you guys, when you enter a trade, you must have a idea invalidation area. I'll type it out in chat. Idea invalidation. It's very, very important. So you're telling yourself, oh, break of market structure, price can go up, continue going up. But then price goes lower and lower, and you don't understand why. You don't understand why. You have to understand your trade. So in this particular instance on the M15 chart, I'm just looking at the overall. My idea invalidation area would be if price breaks this area. Why do I call this my ideal invalidation area? Invalidation. Yeah, you're spelling right. Invalidation. Ideal invalidation. So why is it important? Same thing. If you draw the zigzag, why did I enter this trade? I took it as way on market structure due to the zigzag, right? The zigzag got broken. But the same scenario can happen right here. Price goes up, down, zigzag. But if the zigzag gets broken a lower, what do you expect? You expect price to come lower already, right? So you expect price to possibly go back up before it comes down to clear your stop loss, to hit your stop loss. So let's say if price decides to come down here and idea invalidates my idea for this buy, I'll start looking for a retracement, another fair value gap, or set my take profit to my break even. So price can potentially hit it and I close my trade before I let the price continue down. So you're managing your trade knowing that your idea is already wrong. So you can reduce your losses instead of letting the entire stop loss get hit. It's very important skill sets to master. You have to add it in. Okay, so moving on, can take a look how price reacted to the area on the M5 chart. So do a quick little replay right here. So I'll just speed things up. Times 10 already. So you guys don't have to just stare at the screen. Hit, take profit, it close a bit and continue heading upwards. And then my final take profit was hit somewhere on top here. Not here, somewhere higher up. It's not here yet. It happened today. But I will show you guys on the larger time frame. So with that being said, I also entered another trade right here. I remember very, very clearly. Setups usually happen during the London or the New York session. So I'll exit this replay right here. Okay, price coming down, but over here, had a nice entry. I only had a 1-to-1 entry because I already had enough of the markets, already had some nice profits. I only did a 1-to-1 risk entry. Okay, so can see it's here. Why is it here? Same thing. You guys notice there is a market imbalance. This happened last night, Wednesday, 26 October at 9:35 a.m. New York time. So same thing here, there is a market imbalance. So how did I do that again? Let me draw out the zigzag. So price down, up, down, 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 goes down. And then it went up to break structure. This area, this structure has been broken. Same thing. Let me mark it out very, very clearly on the chart for you guys to take a look. But this was honestly a risky trade. Why is it a risky trade? I also knew it was a risky trade. It was very, very risky. Because I do not like it if price closes like that. Although it broke the structure right here, it is only a weak WICK. It's only a weak close. What I want right there is a body, the body of the candle to close above this area. Just close it. I want it to be higher up. So I reduce my risk to 0.5%. With that being said, I actually set this area as break of market structure, but I bracket it as it was a weak one. Pretty weak one. So I know how much to risk. The moment I write weak on the market, WEAK, risking 0.5%. So marking out the market's imbalance zone where price could come back down, I had my entry there. Stop loss below, same thing, because of these liquidity areas right here where price could come down and clear. So my stop loss with that, and the take profit at the next high. Buy side liquidity netted me a 1 to 1.28 risk to reward level. So again, maybe this area, I haven't explained how come this price maybe hit this area. I remember it was something like I was using a Fibonacci. So I was using a Fibonacci line. You guys can find it on the left side of my trading view. You guys can take a look. 1, 2, 3. It's called the Fib retracement. So I draw it from the bottom all the way to the top. And then I set to all Fibs. So you can see price actually tapped very nicely over here. Although there were no zones here, nothing interesting. But price tapped into the 50% Fibonacci retracement line. So it tells me that price actually went into the smart money concepts. We like to call anything that price is when it's below 50%, it's called a discounted zone. It's discount. You want to buy at a 50% discount. Everybody wants it when it's at 50% discount. But when it's on the high side, above the 50% zone, it is a premium market. So in a premium market, people won't want to buy at the top. So if you buy here, you are holding your trade, holding very long if you are in a buy. I'm not sure what kind of methods you guys use. So with that, okay, let me draw the area out again. I might have deleted it. Okay, still here. So I'll just set it to 50%. What I want is confluence. So I do not just rely on smart money concepts only. Oh, I just draw a zigzag. Very easy. Break on market structure, find an imbalance. I also still want to top-down analysis, looking at the 4 hours, 1 hour, larger time frame, and also use the Fibonacci. I like to use Fibonacci. Why? Why do I like to use Fibonacci? Because many retail traders, many traders like us right here, we can use Fibonacci to have our take profit zone if we are unsure a potential area to take profits. Many traders use Fibonacci, and also algorithms. Many trading robots, EAs, are coded with the Fibonacci involved. So the robot can actually have all these zones, price. The robots are actually looking at those areas too. So I'm using Fibonacci as a very, very huge confluence. Price tapped in nicely and bounced. So 1 to 1.28 risk to reward. Okay, this is today. I haven't entered any trade yet. I've been pretty busy today. So let me show you guys this very specific trade. I try to find my trading view. Maybe it might be here. Okay, I will turn on another trading view chart. Open a new incognito window. Okay, tradingview.com. Okay, guys, give me a moment while I sign in. It's under the Apple. Okay, let me sign in. Let me sign in. Okay. Okay, it's still loading. It's logging in. Logging in. Have you guys entered any trade today? Today there's quite a lot of news on the euro dollar tonight. I will be personally avoiding that. It's going to be very, very volatile. So yeah, let's take a look at my account. So I was showing that trade. Okay. Let's find it. I found it already. So focus on this area, guys. Focus on this trade. Focus very, very clearly. Take a look. What happened to price? What happened? So this was 25th. This area. See, this area, I got to find my forecast. I don't want to be presenting the wrong forecast. Where is it? Is it this? 0.98998. 0.98. Okay. See this area? Wait, let me get it working again. 25th. Ah yes, this area. Found it. This was another entry. I think I haven't shown you guys this entry. Okay, I might have missed this out. Okay, I'll show you now. Okay. This is on my TradingView account where I wrote this on the October 25th before it happened. So I had a point of interest. Maybe I can zoom in later, the M2, M3, in case you guys want to see how I refined it down. So I had also a M15 point of interest where I was thinking price could tap in and fly up, or tap into this M15 point of interest before it hits up. So I already had that in plan. I already had that idea at the start of the day. So I was just waiting. I even marked out the previous day high to and buy side liquidity, the H4 point of interest, some candle on the left side to add further confluence to the trade. So price, can take a look where price, what price did. I load new bars, price tapped into the M2 and M3 point of interest before it hit take profit. So one nice thing also, I wrote this on, okay, not this, is that this? Where is it? Where is it for next week? Ah, yes. I updated this 11 hours ago, but I wrote this on October 22nd. It was on a Saturday. So while everybody was out partying, I decided to prepare for the following week. So you can see on the H4, I expected price to tap into this H4 fair value gap, hit the point of interest, bounce back down, and head up to the, okay, this is a bit more advanced, I won't be explaining today. There is the unmitigated fair value gap, buy side liquidity, where I forecasted that price would hit this area, 1.00863. So let's see where price is at now. Take a look. It hit, it tapped here, bounced down, fair value gap, and continue straight up into the exact 1.00863 area. I like to refine it down. That is why I have this very exact area, and price tapped, and immediately you can see there's a reaction to the area. And my take profit for this week has been hit. It's done for the week. So I'm relaxing. If there's nothing new in the charts, I won't be taking anything. Okay, same thing with gold. I just show you guys a quick one. So gold on the October 22nd, same Saturday, I drew out, price tap into the fair value gap at 1642 area. I was looking at the 1642.348 area for price to continue going up to the buy side liquidity, where the 61.8% and 38.2% Fibonacci lines are located. So this is the H4 chart. Let's take a look. I haven't looked at gold yet, so maybe my forecast might be right, maybe it might be wrong. Load new bars. Let's go. Okay. Look at this. Price tapped in nicely into the 1642.348 area before it rebounded up. Maybe it might hit the take profits, maybe it might not. Hey, Cobus Smith, you said, sorry, how can I find that the TradingView files of yours? Okay, I'll send my account to chat. You guys can follow me. If you want. I will be posting on Saturdays, forecasting the following week if I am free. If I'm free, I'll be posting, I'll be doing this up. So I already sent my account in the chat. You guys can take a look. It's called Doge Stonks. Well, you can read up more about me right here. Okay, yeah, let's move back to the charts. Let's move back. Okay, let's move back. Okay, so for today, I was looking at the 15 minutes. I was actually looking for a possible buy entry, but I think that is invalidated already. So I was looking at this area, a possible area right here, right now. We are in a M15 imbalance right here. Right here. Where price hasn't tapped in, but it has just tapped into that area. So maybe, just maybe, if we see price break this area, just maybe, and have a nice body close, maybe you guys can enter. Okay, I wouldn't say you guys can enter. Don't enter, don't enter. Don't enter just because I say enter. Always wait for confirmations. Read up more on smart money concepts first before you guys continue. So with my stop loss maybe at the bottom, I can take profit to maybe right here. There's pretty much quite a lot of liquidity resting right here. So I'll mark out the highest one. The buy side liquidity, where price could potentially hit that area. So yeah, this is the only outlook that I might have for today. But just a reminder. Let's go to Forex Factory. So I typed wrong. I typing too fast. Forex Factory. Okay, so you take a look at tonight. There's the main refinancing rate, the euro and USD, 8.15 and 8.30. So for all these kind of rate news trade, let's think logically. Let's think very, very logically. It's a high, very, very important news. The refinancing rate, previous 1.25, increase to 2%. What can happen? The euro dollar can get stronger if the actual is right, because it's way much better. This is the bank, the interest rate in the banking system. So it's going to be a very, very volatile market. The advanced GDP, USD, coming up minus 0.6% to minus 2.3%. That is a huge difference. So this is going to be very volatile. 8.15 and 8.30. And 8:45, we have the ECB press conference. So for tonight, if it's like that, especially with the ECB press conference, I am out for today. There's nothing much for me to touch. I would rather take profits and not sustain any losses. Okay, so yeah, I'm probably out. Not probably, I'm 100% out today. It's already 1 hour and 15 minutes to the news. So let's think logically. When there's a red news, I'll just make it simple. A red news coming up. Take it as you are crossing the road. You are crossing the road, but there is a huge truck coming. A huge truck coming. Do you want to cross the road? It's the same as you are taking a trade. Do you want to cross the road knowing the huge truck is coming? Or do you want to wait for the truck to pass by first? Before you look left, look right, check properly before you cross. It's the same as trading. So I would rather let the red news or the volatility, maybe 1-2 hours or maybe tomorrow, let it ride, let it pass before I safely cross the road. So yeah, you guys can follow me just now on that account. I will be posting maybe some educational materials on smart money concepts for you guys to learn. I'll try to simplify it. Yeah, so if do you guys have any more questions? Do let me know in the chat. Do let me know any questions that you guys might have in the chat. Hey, nice. Today was your first time today. Hey, please come back more often in the next future webinars. I do hope to be presenting. Any more questions? Just let me know in the chat. I'll try my very best to answer them. But if it's I like you, safe way of trading. Yes, just trade very, very safely. Just let the market do its stuff. Do not force a trade. Do not force a trade, man. If you are forcing a trade, it's as good as gambling. If you are gambling, just head to the casino, or you would rather give it to a homeless person, right? If you are just throwing your money in. Hey, Martin, you said thanks a lot for my time and letting us have a view of my analysis strategy. No problem. What I want to do is provide my knowledge for free, just letting you guys Hopefully you guys will be better traders and be profitable. Hey, we'll check your YouTube videos. Hey, thank you very much. Okay, there isn't much, but thank you very much for your support. Okay, I'll give you guys another maybe a minute. If you guys got any questions, I'll try to answer them. Else, I would be ending this live stream, this webinar for today. I'll just move it over to the to the thank you page. So yeah. Yeah, any more questions? Any last few questions? I will answer them. Okay, if there are no further questions, hey guys, thank you. How can we contact? Oh, maybe through the maybe you guys want to contact me, you can chat with me through the TradingView chats on my accounts. They are already sent into the chat. Maybe you guys can contact me there. Just let me know who you are, maybe so I know that I'm not talking to a random user on TradingView. But again, thank you very much for joining me today. I appreciate the support. That you guys stay on and listen. Thank you, Carino Bruto. And thank you, Cobus. Thank you, Martin. Thank you, Michael. Thank you, Abdul. Thank you, Mito Kozosi. Thank you very much for joining me today. And my name is Chen Yongjing, and I do hope that I can share more of my knowledge with you guys in the future, especially more future webinars. So feel free to tune in, learn more about smart money concepts, and have safe trading in the markets. Implement it properly. Thank you and goodbye. Bye guys. Bye bye.